Hello, everybody. So a few months ago, I started covering Zoom stock. Zoom, of course, the video conference software. But I never covered it because I liked stock. I covered it because I like the ownership stake of the stock in Anthropic. Indeed, Zoom invested 1.2%. They bought 1.2% of Anthropic back in 2023. Now, that stake is a little lower now because there's been further dilution afterwards, but they still use a very sizable chunk of Anthropic compared to their market cap, and this is in no way reflected in the current value of Zoom, despite the 20-ish% run since I started covering it. The stock went up about 20%, from 3 months ago. It was in the mid 80s when I first started covering. We had 107. We spiked at 110 a week ago. I still think this valuation does not represent the true value of Zoom if you include the actual value of the Anthropic stake. And I see a lot of people talking about proxies right now because they want to get exposure to Anthropic. Anthropic is rumored to IPO perhaps in October, and they would IPO at a higher price than SpaceX, perhaps $2 trillion. And at least that is what the pundits are saying, 2 trillion. So a lot of people are talking about Amazon and saying, "Oh, Amazon is my way to play this stake." Now, if you look at Amazon, one of the reasons why one would like Amazon is because Amazon has enormous downside protection. It is a great stock without Anthropic. So that's why people are like, "Okay, I'm going to get Amazon because I want to have Anthropic as the cherry on the cake." But you see, Amazon owns 15%, and if they exercise an option for $20 billion, from what I understand, they would own 21% of Anthropic. So that's a lot of money, right? That's $420 billion in a best case scenario if they exercise the option and if Anthropic is actually IPOing at $1 trillion. It's actually a little less because they would dilute by about 10%. So it's actually more like $380 billion here. Nothing to sneeze at. But you see, Amazon's market cap is $2.8 trillion. $2.8 trillion, and you had $400 billion, and again, if you dilute, if they raise 90 to 100 billion at IPO, that's closer to, that would be between 13 and 15% bump in market cap for a stock like Amazon. Really, really good, but it's like 80% of a great earnings report, right? Amazon has moved many times 20% on earnings. So to me, Amazon is a great company, but it's really not a great play, or it's at least a very conservative, safe play on a quote unquote, right? No financial advice. Nothing is safe when you buy AI stocks. No financial advice, but it's a more conservative play on Anthropic, right? And if you look at Amazon's valuation at 0.52, it's good. It's good. It could be cheaper, but I would like to see it cheaper. To me, for example, Nvidia is cheaper than Amazon, and Nvidia has much greater growth, so I prefer Nvidia. But Amazon, for example, is much cheaper than Google in my spreadsheet. So some people are saying also Google is a way to get Anthropic exposure. Yeah, it's true, but Google is already expensive as it is. So Amazon is perhaps a better proxy than Google. But perhaps the best proxy of them all for Anthropic, to me, is Zoom. So if you look at Zoom, the company itself on my spreadsheet looks really bad. EV over GP over RG which is my growth adjusted metric, right? That's the metric that I use to mainly judge growth stocks. It looks very, very bad. But why does it look bad? It looks so bad because it's only predicted to grow next 12 months at 4%, right? If Zoom was trading at 12% on next 12 months sales, my metric would be roughly the same as Amazon. Unfortunately for Zoom, they're not growing very much. They're growing, at the pace of inflation. They're growing lower than monetary printing. So it's not that exciting of a business, although I will say that at 27% EBITDA margin, and those EBITDA margins are growing, predicted to grow next 12 months at 35%. The PE is 17. I would argue Zoom on its own, if you just look at Zoom on its own for a value investor, that's a very reasonable play, especially because they're hitting operating leverage now, and they're having a lot of operating leverage, and the odds are this stock will have 50% EBITDA margin in no time, and so then it will just be a cash printer that doesn't grow very much. But that doesn't excite me, right? I'm a growth investor. What excites me is how much Anthropic they own. So like I said, and more importantly, the Zoom is mostly de-risked because they have $7.7 billion worth of cash on the balance sheet. So they're profitable and they have a bunch of cash on the balance sheet. What are they doing with that cash? I don't know. But they're profitable. They have a bunch of cash on the balance sheet. Maybe they should do something with that cash. I don't know. But the point is, if you look at Zoom, the enterprise value is 23 billion. 23 billion of enterprise value. Now, how much of Anthropic do they own? 1.2% from the Series C funding 2023. But that has been diluted down by subsequent funding rounds. They've been many more funding rounds. And I have a hard time figuring out how much they own now. Is it 1.1%? Some people say that. Is it 1%? Some people say that. Is it 0.8%? Some people say that. And then you have bears who say they own even less and they got diluted away. I have a hard time finding it out. AI seems to believe it's a tad under 1%, so I'll probably go with 1%, just for the sake of simplicity here. But if it's 1%, there is a major delta, and actually I will actually go with 0.9%. I'll show you in a second. But there's an enormous delta, of course, between what value is carried on the books. Zoom's carrying value on the book for Anthropic is 1.2 billion. So Zoom's 1% stake, Anthropic says on the books that it's worth 1.2 billion. Well, it's probably worth a whole lot more than that. So what could it be worth? Well, let's go and analyze it. So first of all, we have to assume that 23 billion is arguably a fair price for Zoom without the Anthropic stake. And when I look at Zoom, I'm like, yeah, $20 billion for that business without the Anthropic stake. That's probably a fair price. I wouldn't be interested, but a lot of value investors would be interested. Of course, what is not factored into that 23 billion, what's not factored in, is their stake in Anthropic, which let's assume is 1%. And post-IPO, so if Anthropic raises a $2 trillion valuation, if they raise 100 billion at a $2 trillion valuation, I made a mistake in my math. So you see, I'm super conservative. That's actually less than that. That'd be actually 0.95. But okay, so I'm gonna be super conservative and just assume a 0.9. So you see, I'm very conservative. It'd be a 0.95. I made a mistake here. Anyways, so let's assume 0.9. So we're being conservative. Let's assume 0.9 post raise. So that's 23 billion plus 0.9% of 2 trillion. So that would be 23 billion plus 18 billion worth of Anthropic, which would be the new value of the Anthropic stake. So 23 billion plus 18 billion, you get a new enterprise value. In my conservative view here of 0.9, you get a new enterprise value of 41 billion. So that means that after IPO, in my view, the new enterprise value should show, 80% upside. We should have 80% upside if the market is logical in any way, because they own 1% of a company worth 2 trillion. Right, so 1% of a company worth 2 trillion. If Zoom doesn't go up, then that means Zoom is valued at $3 billion. And of course, a company with nearly 50% EBITDA margin next year, earning $5 billion in sales, having $5 billion in sales, can't be worth $3 billion. So to me, there could be some epic repricing for Zoom after the IPO, as people realize that actually the stake to market cap of Zoom, the Anthropic stake to the market cap of Zoom is enormous, and it's going to be nearly 100%. While for Amazon or for Google, it's never going to be that because these companies are so huge. And casually, I also stated two things here. Anthropic's stated ambitions are absolutely insane, borderline crazy. You may have heard some of the crazy stuff they say, like, oh, there will be states and then there will be Anthropic. That was a crazy quote that they said. Also, there's a lot of evidence that whether it's Anthropic or OpenAI, they're using the compute to build the next gen models and to not release models. So there's recursive self-improvement on these models. So these models are getting better and better and better, but they keep it in house. They don't publish it because to win the race of AI is you got to be the first one to have this super intelligent AI, and so they're doubling down on this. So it's a borderline crazy ambition. It's definitely an enormous ambition. You may remember OpenAI, who had like a $7 trillion investment ambition or anything like that. So what I'm trying to say is that it could go up at IPO. It doesn't have to stay at 2 trillion. At IPO, it could go to 3 trillion. And we certainly saw SpaceX go up quite a bit at IPO. That surprised a lot of people, including me. So that's the big deal. And then I'll leave my viewers who follow crypto with a little thought here, which to me is fascinating. And this highlights the good management of Zoom keeping that stake. This is kudos to Zoom. I'm giving kudos to Zoom for keeping that stake and not selling it early. We have examples like in the early days of Tesla. You had was it Mercedes-Benz selling their stake in Tesla in 2010. Bad management. You know what's an example of other bad management? The people who manage the estate at FTX. A lot of people are going to lose a lot of money from STX, and I can't help but having pause at whoever managed the estate at FTX. You remember the collapse of 2022. Who managed that? That's absolutely crazy, because when I calculate how much Anthropic FTX used to own, that would be worth 180 billion today. So you could have made the poor people who lost money. You could have made them 20 times whole. And they literally sold the stake for less than 1 cent on the dollar. I was going to say for pennies on the dollar, but when I calculated how much they sold that stake, less than 1 cent on the dollar. Actually, something like 70 cents on the dollar, they sold that stake. And they sold that stake to hedge funds, like Jane Street or things like that, if you look. So that also gives me pause. I think there will be a lot of debate in the coming years about this. So this is a kudos to the quality of the management at Zoom for actually not only investing in Anthropic in 2023, FTX had invested in 2021. Think about that, but also keeping that stake. And what gives me confidence in that management, at least in the finance folks who did the investment, is that I think it's likely that Zoom will keep the stake. And Zoom is trying to be a partner with Claude, and they're trying to have Claude go into the conference calls, etc. So to me, I like this play. It's a little bit different from my usual plays, but I like this play very much. And so we'll see how that goes. But that's how I'm playing the Anthropic IPO. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.